All right. Hey, good morning. How are you? ¿Cómo te le va? Oh, wrong button. How about that one? Good morning. It's Inflation Wednesday. You knew it was Inflation Week. Told you about that on Monday. Here comes the big one. CPI. Actually, people forget the Fed doesn't even watch the CPI. You notice that? I don't know if you watch financial news or read financial newspapers. Everybody's freaking out about this CPI, right? It's going to make the Fed. It's going to make the Fed. The Fed uses PCE, bro. But anyways, it'll be very interesting. Everybody's very upset about CPI today, and we get to trade it. Boom, boom, boom. Nice. How many cups of coffee do you have a day? Ooh, that's personal. Perry, man. Barry asked a question. He digs up. He digs in, man. What do you care, Barry? What's your problem, bro? Huh? You got a problem? Yeah. I don't know. Never enough. It seems like the end of my coffee day is when I go like this and nothing comes out of the machine. I'm like, yay! Because I don't drink the little K-cup stuff. I don't mind spending a lot of money on coffee. I mind spending a lot of money on crappy coffee. So anyways, I don't know. But French press, yeah, I have a drip that's just convenient, but I tend to buy better coffee, but whatever. What are you guys talking about? Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. But if you get too much caffeine, what? Well, thank you for being concerned about my health. Hey, my name is Wayne. Nice to meet you. I'm the Chief FX Market Strategy for TradersWay.com. We're a boutique foreign exchange brokerage firm. We would like to woo you with competitive spreads. Everybody says they have competitive spreads. Great. What else would you need to be successful? How about a wicked fast execution speed? I've seen it. Third-party tests show that TradersWay is faster. That's what I've seen. What else? How about world-class customer service? Now, most people don't have that. And then there's me. I'm here to help you become a success, not tell you what to do, but teach you how to be an independent, skilled, patient, disciplined currency trader focused on the long term. Huh. Well, that's pretty awesome, isn't it? So we'd like to be awesome in your life every single day. So visit TradersWay.com. Give us an opportunity to earn your loyalty and respect. I do these sessions 7:30 in the morning, Monday through Friday, here at Forex.Today. If you're watching a video, like if you're watching this video in the future, which means it's a past video, you know, in the future, if you're watching this, it's the past. Click like and subscribe and all that kind of stuff on your YouTube or wherever you're watching this. Don't be a lurker. So let's get going. We have CPI, and there we go, CPI. So we'll go through the charts. We'll go through your charts as well. We'll trade the CPI together. I guess we'll just use euro dollar. And this is an MT4, Barry. I thought we would talk about the wage stuff, and it just occurred to me, maybe I could show you some slides out of my Harvard class. What can I show you without getting into trouble? Oh, whoa, don't put it there. Hang on, let me stop sharing for a second. La 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 la. Where's my thing? Okay, open. Where is it? Over here. lectures, yeah. Files, labor market Friday, employment situation report. Okay, I could show it this way, I suppose. No, let me download it. Open it up. Un momento, por favor, almost there. And where is it? So I'll move that off. Almost there, guys, don't panic. And all right, we'll do it this way. This was produced by Professor. All right, do you see the pretty colors? Cool. All right, let me get this out of the way because you probably see that. All right, so this is not my data. This was produced by Professor Foote for our class. So this is just the most recent non-farm payrolls. Okay, and just pulled this out of the BLS. This is something that he does at the Fed. So these are all the headline non-farm payrolls. This is back the recession, right? And you can see our current sort of flow as far as the headline numbers of non-farm payrolls. You see it's okay, but it's, it was, how do we do this? That's kind of where we are now, right? But since 2016, it's been all right, but we're not hitting 250, 300. We're hitting 200 or less, right? Right? What would explain such a thing? And why would we be worried about inflation if we have less and less jobs added to the economy? Perhaps we're closer to full employment. That's true. Okay? That's one thing that may explain that. Okay? It's not less jobs to add, less jobs filled. Minimum wage hike. Well, we'll see. Not this weekend, next weekend. I'll be debating that with a Fed official. And she used to work at Boston, where Professor Foote works. Now, there he's like senior economist and professor at Harvard. Like, really? You're a Harvard College professor and you work at the Fed? Where'd you get your PhD? Right? So anyways, so let's go back to that. Oh yeah, now she works at the New York Fed. And that's the big one. The New York Fed is like the New York Fed. I mean, that's the big one. That's where the trading desk is. Wouldn't it be cool to be that type of person that, like, when I'm in New York, drop in and hang out with my Fed buddy? Hey, can I hang out on the foreign exchange trading desk? Buy 4 trillion euro, get it done now! Boom! Yeah. Quick, we gotta bail out the Bank of England! What's up, Carney? Calling from the trade desk, NYC, bro. I don't know. I must be a macro geek, huh? I mean, I'd find that fun. Anyways, but that would be cool if we go that. Remember that idea I had about the trip where we spend the weekend at the Jekyll Island, and I teach you everything about the Fed in the same room where J.P. Morgan and his buddies made the Fed. And then we go to Washington, D.C., and we hang out at the Board of Governors offices and get a tour and stuff, and then get on another train and head to New York City. And wouldn't it be great if we could just hang out with our Fed buddies at the New York Fed? You know, some guys, they dream of, like, going to Thailand or Amsterdam, getting high and hanging out with tramps. I'm like, no, I'd rather hang out with the Fed in New York City. You know, that would be my dream trip. Anyways, over time, unemployment rate went up, unemployment went down, 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 down. We were at 10%, right? But remember, right? Remember, you have to, the whole labor force is those with jobs, those without jobs looking for jobs, and everybody else. And the interesting thing is, if you look closer at this data, there's a couple of other things going on. Like, it looks pretty easy, like there's 10% unemployed, and now we're at 4% unemployed, which is, you know, the natural rate you would think, but it may still not be a perfect number there. There's some room for interpretation. So this is kind of where we are now, zooming in. As unemployment comes down, it's pretty steady now, because it's going to be very, 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 very difficult to drop below where we are now, essentially 4% unemployment. It's going to be very, very difficult. And so, you know, you'd think headline non-farm payrolls would be heading down, right? The headline number, which would explain this. There's just no one that wants a job, right? Getting a job, because everyone's got a good job now. And in fact, what's happening is we're worried about people just walking across the street doing the same job, but for more money. Because it's the only way to get someone to work in your factory is to steal someone from another factory, and it wouldn't change non-farm payrolls, right? Because remember the establishment survey, it just simply looks at payrolls. So, you know, the Bureau of Labor Statistics doesn't care which factory you work in. They're going to see a paycheck stub, and that's that. So you're already going to be counted, right? Or if the other survey where they're calling up the households, do you have a job? Yes. They don't say which factory. They don't care. Okay. So what's the big deal? Okay. Check this out. This is the scary part. This is the labor force participation rate. And this is the other part this is telling you about that it's not talking about. The labor force, 67%. So let's say 2/3 of everyone in the United States eligible for a job basically was in the workforce. They had a job or they were looking for a job. And if they didn't have a job, maybe they were in college, maybe they were retired, but at some point they're not counted. But this is the pie of people with no job, not interested in a job, they're not looking for a job, maybe not even be qualified for a job. Okay, so here's where we're going. What's the big deal about non-farm or about CPI today? And this is from the non-farm payrolls, and this is what freaked the market out. This is why the stock market dropped, you know, 1,400 points in a day, which sounds really scary because, right, they'll tell you, oh my God, it's the worst day in history. You guys hear that? Wasn't the news just freaking out? It's the worst day on record. Well, that's nominal if you want to look at it that way, right? When was the last time the stock market, the Dow was at 25,000? So to say it dropped 1,400 points, is that the same as like 1982? When the Dow was at what, 7,000? So look, yeah, a 4% drop is huge, but the 1,400 point is irrelevant, in my opinion. So it was a bad day, but come on, report it properly, right? It's the end of the world, the sky's falling. Like, actually, ma'am, we figured that was going to happen, right? I think we were talking more like 10%, weren't we? What did we discuss in the past? No, Chuck, no, it didn't drop 14%. Didn't we say something like 10%? I don't know. We've talked about it so many times, I don't even remember now. A 10% decline is probably a buying opportunity, right? Didn't we talk about that? But the concern that I had was if you do cash some of your positions out, maybe instead of reinvesting into the US stock market, you reinvest somewhere else. I know we've talked about that. Maybe it's better to buy a Dutch company than buy some more Apple stock with your dry powder, right? Maybe it's time to invest in Vietnam or something. No, we didn't talk about any of this? Well, I apologize. Oh my God. Well, at least I must have been talking to myself, right? Yeah, I must be talking. Yeah. Oh, good. So, oh, good. I'm not going crazy there. So, a 4% drop in one day is volatile. As long as I get to my 10%, I don't really care, right? Right? Oh, well, Venezuela is a different. I'm talking about investing like, grandmother's pearls. I'm not talking about rolling the dice on Venezuela. I would consider that more risk capital. But, yeah. But I do know somebody selling a casino on a small island off the coast of Venezuela. Because there was a time when the only place you could have the gambling casinos were on these islands. You couldn't be onshore, so you just take a little ferry and a beautiful palace and everything. Actually, I was looking at a coffee shop in Victoria, British Columbia. I was thinking about investing into a coffee shop in a little tourist town with very pretty flowers. That'd be interesting. But anyways, whoa. Where? Grandpa's lost again. I don't know where I am. All right, let's get back to it, Grandpa. All right. By the way, happy Valentine's Day. Do you like my beautiful color? Look, it's not Ralph Lauren. Whoa. Oh my God, what is it? Lane's not wearing a Ralph Lauren. Oh. I don't know if I can do it. Boo. Yeah. Ross Dress for Less must be out of polo again. Anyways, here we go. This is what freaked the market out. Now, the press is reporting like it may be the end of the world. Okay? I think it's a catalyst to simply take some profit, and we've discussed that to death. But what's going on here? What was the catalyst? And this is hourly earnings. This is it. This is the wage growth. Look at this. So we were way up here, right? And higher. So wage is falling. Of course, unemployment's going up. Wages are falling, right? Down here, 2012. Holy smokes, right? And then spiked up last year. And then whoop. Okay, so let me clear this out. Let's draw the most important part of this. Okay, we're here. What, 3-4 months in a row? I guess we'll count that as 3 months in a row because this was a bottom of climbing, but also look at the rate of climbing. It's climbing pretty quickly. So I wouldn't call it a trend quite yet, right? If we were currency traders trading this, we would have support and resistance and all that kind of stuff. So we'll see, maybe if it breaks out, makes a higher high, maybe, but we're approaching that 3% there. Okay. And it's that. So they're saying if wage growth is going up, then people may be going out and buying more stuff and driving prices up. They're earning more, so maybe consumption goes up or something, right? But this is all, of course, in nominal terms. So you got your wages. And if you're a factory, what you're looking at is wages over productivity, right? And the interesting thing about this is now you get a per unit or marginal number, a real number. So what if productivity is 10 and wages were 1, meaning for every hour worked, you earned 1 unit of payment. Let's say if you made TVs, right? You were paid 1, but you produced 10 or whatever, and that would be your real wage, right? So what if this goes like wages go from 1 to 2, but productivity goes from 10 to, I don't know, right, let's say 10 to 15. Now it's not a one-for-one step, but you could see in real terms it's not 100% increases in wages, right? Now, what we would really say is instead of 1, let's say it went from 1 to 1.1, right? And let's say, but you were able to produce an extra TV per hour because somehow productivity went up. Maybe there's better workers, maybe there's better capital, whatever. But we're also watching productivity rise, right? So people may be freaking out that how much money you earn per hour, let's say, is going up. But if productivity also goes up, then in real terms, there would be a much smaller change in inflation. You see where I'm getting to? It may be over-reported. Because productivity is also low, not just wages. So you have to look at it real terms. This is just sort of my thought. But what the market is freaking out about, and remember, the people is stupid, and right? They're freaking out that this wage growth, this nominal wage growth, is going to create inflation, and then inflation's going up faster. So if we get 1.9 core during CPI, the market's going to freak out and say the Fed's going to have to jack up interest rates, much faster than what's already been priced in, and that's going to make borrowing costs go up, which makes profits go down, and then the stock market's going to decline on forward-looking, less profit growth and smaller margins, and the stock market's going to go in the tank, and everyone retired is going to live on cat food and 3-day-old donuts from the garbage behind Starbucks. Where's Grandpa? He's in the dumpster behind Starbucks again. Oh, come on, Grandpa. And I'd say to Grandpa, look on the bright side. It ain't South Africa. So how are we doing, South African friends of mine? What's going on? It's been 12 hours. Did the kick Zoom out yet or what? People are pretty happy. Yeah, but people are pretty happy with the Rand, huh? So maybe we'll look at the Rand later. But I hope you appreciated a little Harvard College education. It's really cool to see someone, my age or even a little bit older. I think he's a few years older than me, and he gets excited about non-farm payrolls. And he's like, he tells you, I get excited. Fridays are my favorite day. I'm like, Fridays are my favorite day too. Right? Oh, Professor. Yeah. All right. So yeah, so we're going to trade NFP, CPI. They're making a big deal out of it. So the market will move. The question is the market stupid, or is the market legitimately preparing of whatever? I don't know. I don't. I think they're not on the clue train, but I would not fight the market. Okay. So based on this, we already have a plan. I don't know if you remember. Basically this. Okay. Now typically, you know, you get the lower high type thing going on. So that could happen today. We'll move this over just to account for the time. Okay, that is one plausibility. If it doesn't do that today, be very careful of the top. Okay. Now remember, the first day of the month, this was a sell, and the target's down here. And I'm okay with dollar strength until about April 1st. It's probably more like April 5th or something, but okay. Yeah, Juan, you'd probably, instead of betting on the news, I think you should wait for the news, right? And deal with it. And if you don't catch it, don't worry about it. We got long-term trends here, right? Well, I didn't say sit on the sideline. I said I'm telling you to get ready, right? Do your analysis, right? Are you going to fib the sucker, right? Are you look left? Where are the old supports? Where are the old resistance? So, set up your sweet spots. So this whole area here is pretty good. I'll go insert, shapes, ellipse. I messed that up too, didn't I? Insert, shapes, ellipse. Okay, that's the whole sweet spot. So then you got to just be ready. Suppose it's the shape moves when I do it that way. And totally moved. Wow, look at that, how much it changed. Woo. Anyways, I think you get it. Thank you, MT4. That's worthless. All right. That's the thought process. So drop into a smaller time, get ready. Well, it's more seasonal. I mean, ultimately, I can't tell you because I don't know. There's no way I could prove why one person did something, yet alone millions of people did millions of different things. Because obviously they had millions of different reasons, but I boil it down to a combination of essentially tax season in Japan and tax season in the United States. Okay. Okay. I think on this chart, I cautioned you to, even though we hit our target, I think I was cautioning you in here to not just simply buy, but to wait for maybe something like this. And seems like it was good advice so far. I wouldn't sell it, and I would wait for confirmation to buy it. I think I said something like, you don't have to be the first trader in this, right? In fact, I kind of went, yeah, kind of neutral, just sort of not really interested. And there you go. Right? Know when to walk away is sometimes a very good thing. Cool. Hopefully a lesson learned, who knows? Okay, we were looking at that time, you can see we were looking at this as resistance. There's a bottom, there's a bottom, there's a top, there's a top. Pretty interesting place to look. And I think we did that on a Friday, and Monday just gone. Is that right? No, maybe that's, yeah, that's way longer. So that's interesting. La, 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 la. Of course, oil's falling that whole time. So you have a choice here, and maybe against the dollar isn't the right choice, right? I think you might, if you're interested in trading CAD, this may not be the right one. If you're a buyer, you're buying dips into there, and if you're a seller, you know, you're kind of in this area here. So I think if I wanted this to fall, I'm kind of in the right area. I'm really, I don't know, especially with CPI. I don't know. So how about this? If core inflation is low, like 1.5, 1.6, the dollar will probably weaken. The U.S. dollar will probably weaken. So maybe CAD moves down, and you have a legitimate, you know, possibility here. It's just I don't know if I want to buy CAD on that. I mean, that's a legitimate pattern. I just don't know if I want to do it. There might be something better. Pound, for example. Euro, for example. Okay. Even gold. Cool. I'll extend this out. Okay. If it starts to get above this area, it may be a confirmation that the US dollar strength is dead. Not ready to call for that quite yet. I want to change peso here. Look at the sell zone. Boom, boom, boom. Too easy. Come on, too easy. Let's move this to ZAR. Let's do some ZAR. Let's do the round again. All right. And this is accompanied with strong US dollar, right? Ole, mole. Ole, mole. Yeah. Check this out, though. Isn't that nice? That's the monthly top. The monthly top. And it tells you we can be short down to 11.5. Remember, we started this gravy train up in here. Remember that? We sold it hard, did really well, sold it hard, did really well. We're on the next wave down, huh? And to show you how lovely it is to trade this, here's that resistance zone. Well, I'm a little off now, but it's pretty close. Just saying, that's a price action sell, not just a pivot sell. That was a beautiful opportunity. Now, the interesting thing is if it's going to rise, if suddenly South African rand gets weak and the US dollar gets strong, it's supposed to do it right where we are now. So let me drop into a smaller time frame. If that is supposed to happen, it's supposed to happen here. Cool, right? But why does the South African rand really get strong here? And it's funny because the world says, well, maybe things can't get worse. Jumbo! What? Wow, huh? That's not a stellar report card, is it? No. It may be every billionaire in South Africa getting their money the hell out of South Africa as well. So it might be rats leaving a sinking ship. I'm not really sure. Or it's the world saying, hey, man. So I don't know. I don't know what it is. Yeah, it wouldn't be rats leaving a sinking ship, right? Because then the rand would be weak. So anyways, it's just interesting. The world's like, well, maybe there's hope. See, typically when you have an unstable government, your currency weakens. But in this case, they're like, maybe no government is better. Uncertainty means maybe there's hope. Like, South Africa is a great place. What an amazing place. It deserves good. In fact, it deserves great. Right? So it's really a crying shame when the world's like, well, it can't possibly get any worse. The currency is doing good. So come on, South Africa, I'm cheering for you. Look at that. I mean, come on, that's dramatic, right? And the funny thing is we shorted this, didn't we? Remember that? That's when I started teaching you guys exotics. Yeah, maybe now's the time to buy the South African rand. Remember that? Like, yeah, let's just start out of the blue, just out of the blue. Let's start just trading the hell out of the South African rand. And then that happened. Nice, right? Yeah, it was us. It was us. We did that. Right? The power of 15 or 20 mini lots. Boom! So what a good day. What a good day. Let's do the time warp again. I don't have Windows anymore. There it is. 8:17. So I guess we'll get tradethenews.com going. And then we'll go through some of your charts. Maybe I'll try to do that now. Yeah, I think the economy is pretty good. The Four Seasons Hotel sent me an invitation, nice written letter and brochure. We can go on a around the world cruise, staying in all the best Four Seasons hotels in 9 different cities in like 22 days or something. But it's not a cruise ship, it's a private jet. I'm like, what? The Four Seasons 757 or something. I'm like, wow, the Four Seasons has their own private jet to fly guests from hotel to hotel to hotel. All right, the economy is doing well. Sounds good though. All right, so I got Trade the News going so I don't forget. Where is my Forex.Today? Cool. So are you guys using the activity, yes or no? You have a team of people, one, the least qualified of which only has an MBA. The other is working on his PhD. Yeah, sorry. So you guys are using it regularly? Yeah, are you interacting with them at all? Would this be better served as a, look at Ryan's beautiful post. Beautiful post, Ryan. Nikkei, huh? Do you think this would be better as a chat room than these Twitter post type things? How do I get my Google theme black? You changed the Google theme. Cool. So you guys love it. Cool. And who would like me to review their post, their trade plan for the day? We have some time, right? Nobody wants their chart, their trade plan reviewed? Really? So this is funny. I know this post had an image, but it's not doing the thumb or what? Oh, you have it here. So you had to do it twice. Do Ryan 0 USD. All right, well, let me pull up your feed. Hey, Ryan, do you mind putting your actual photo? Follow up yesterday's post. I guess this is the one you want. Cool, thank you. It's a pretty flower. Cool. As mentioned in my weekend trade plans, I was paying careful attention to key prices on the dollar pairs to confirm bearish trend overall. The pound dollar has not broken. Okay. Yeah, a move like this, so this is an hour on euro dollar, huh? Yeah, I can see parts of what's going on here, right? You got this as a bottom, which is a pivot, and that would project here, so that's cool with that. You've already broken kind of a bottom here. So it should keep climbing. You'd stink. Oscillator doesn't really tell me much. I mean, maybe the turn here was helpful. Yeah, the only thing that could really get you is that you're in a fib zone. So as he approaches 618, you just have to assume bears are there. So this is why I really like to teach you guys when you trade, you want to trade at the bottom, or when you trade, you want to trade at the top. Even though this is just fine and has a high probability of doing that, you're facing additional risk by trading in the middle. Okay? So this is sort of the monkey in the middle kind of area. Nothing wrong with that, but I'd rather you be buying it down here as a bull or selling it up here as a bear. And this is kind of 50-50. I call it nomad's land, where you stand up and it doesn't matter if it's a British machine gun or a Turkish machine gun. You're in a very dangerous place. All right? The Gallipoli of Forex trades. Yeah. Cool. Nice setup though. Anybody else?
5 minutes now to this key CPI reading. Again, the headline year-over-year expected up 1.9%, the core expected up 1.7%. Core on a month-over-month basis expected up 0.2%.
Really? You guys are nervous, huh?
Markets are holding near the highs of the pre-market, up about 12.5 handles or 0.5% for the S&P minis, Nasdaq 100 futures up 0.5% heading into the CPI reading.
Okay. Following Abe, very nice. Garota's back on board, great. So that's all good news, right? Daily pivot. This should be, monthly S2. Okay, so monthly S2 you could count as a bottom. Let me clear this out. Even though it went lower, it doesn't matter. On a higher time frame, that's just a wick. So this could be the bottom. If you're a bull, you would be thinking that. Okay, bottom for the month of February. So then you got to put that into a daily context now, which I'll do in red. Okay, and the daily M2 should get you sort of up in here.
The Andrew Minister saying he doesn't have any concern about
which just fits that fine, right?
And the new output from the U.S. is welcome.
Just doesn't fit kind of the weekly stuff.
Saying that's premature to discuss.
So I would look at weekly R1 maybe as a target here.
After meeting with his Russian counterpart,
which is probably here. So it might be an inside day. So. Yeah, I'd be careful between, maybe 86.50, 86.30, but you'd hope 86.50. Cool. Thank you, Joe. Yeah, Joe, can you put a real photo? Cool, and we're just a minute or so. Thank you for posting. I hope it's helpful. I don't see how you could possibly succeed as a currency trader if you're not posting. Honestly, if you don't post trade plans, you won't have a solid trade plan when you trade, and you're a video gamer. You're treating your potential career that can make you a multimillionaire, and you're treating it like a video game. If you're a professional trader, there's no way you would succeed without having technical and fundamental prowess. So I think you're cheating yourself if you're not posting trade plans every day. Seriously. It just hangs, huh, Henley? Yeah, send me images of any errors you have. Wayne at fxbootcamp.com.
Retail sales for January expected 0.2%. Ex-autos expected 0.5%. Ex-autos gas expected 0.3%. Canada Terran.
But I need to see the error message because then I give it to the programmers, right? Yeah. All right. So we got CPI. So let's go into. Well, you know, I'll just leave it here. This sucks.
January CPI and advanced retail sales data. Just a few seconds. CPI at 0.5% is 0.2 higher than expected. Core at 0.3% is 1/10 higher than expected.
0.3. That's not so good.
0.2 higher than expected. With core 1/10 higher at 1.8%. Advanced retail sales at minus 0.3%, 0.5 lower than expected. Ex-autos at
wait, what did you throw?
0.0%
Core.
0.5% expectation. Ex-autos and gas at minus 0.2%, 0.5 lower than expected as well. Control group at 0.4% is 0.4 lower than expected.
Hang on, I thought I saw it twice.
Weekly earnings for January at 0.4% versus the revised 0.9% prior year-over-year.
Oh, 1.8. No, that's pretty
I
high.
expect we're seeing strength in the dollar and
So
rates.
the dollar bulls got what they wanted.
Higher than expected CPI numbers. The U.S. 10-year yield up to 2.86%, now down up 3 basis points on the day.
Dollar bulls got what they wanted.
The euro 1 to 22.97, and
This is the sell zone.
Markets, the S&P minis, after being up 0.5% or down 0.5% at 26.47.
Look at the weekly sell.
Swift reaction here to the hotter than expected CPI data.
So that's a good headline that market got what they wanted. Now they're going to freak out.
We're down about 30% at 13.26. In terms of the Fed Fund futures contract, we haven't seen any change in that December contract.
Oh, grabbed the wrong. Did I do that? It's supposed to be off the bottom of the candle. So it looks like you had a 382 and it's gone. Missed it. Remember, there's no time for group hugs if you missed that. So where the scalper is going to take profit?
Saudi energy minister saying the OPEC, non-OPEC production cuts will not end early. There is a scheduled review mid-year.
There's definitely support here.
Equity futures extending the move to the downside post-CPI. The S&P Mini's down more than 1% now, testing 2630. NASDAQ 100 futures also down more than 1%. We've seen European equity markets move lower as well. And then down.
So we're approaching 123. Are you going to take a shot there? We hit 93, I think. Have you decided? Hope that's a giant yes. So you have to ask yourself, do you believe this is a retracement, right? Or is it a counter trend? Yeah, Lester, but this is not a technical move. So Lester, the way to look at it is your 4-hour chart is measuring what happened yesterday. Your 4-hour chart doesn't say, oh, the Fed, under the guidance of a new chair of the Board of Governors and the FOMC, has permission to raise interest rates, let's say 5 times a year instead of 4 times a year. 4-hour chart doesn't say that. So like I said, I called out we're at 93. Now it's dropped to 78 or something. And then down here is sort of the next area of support. I have it as 2250. And then there's a pivot down here more like 2215. But if it goes down to the 2215, it'll probably come down to 22 and then bounce, because it wants to catch the psych. It's all risk off, Brian. It's simple risk off. That should be automatic. But we also have that priced in too. So if we want to look at the yens, okay, all of this we already have done. I've already done all this, so we already know that this is happening, right? right? Which one of my yen pairs says up? None of them. Absolutely none of them. Look at Kiwi Tank. Beautiful. Just like we said. Right on, Barry. Sweet, huh? Sweet. So I still have to say, going all the way back to our old conversations, even, I don't know, it must have been about 5 months ago. What do you do if you have a crystal ball and you still are not making money? And that's the ultimate awesome question. Like, don't fold on such a situation. It's like, if it's not the analysis, right? If you're losing money and it's because you're like, oh, my technical analysis sucks, or my MACD sucks, I'm going to use ADX. And if ADX doesn't work, I'll use CCI. And if CCI doesn't work, it's none of that, is it? That's the part I like, and you need to isolate that. What is it about the situation where you think you know what's going on and you still don't make money? Well, it's probably because you're not planning. I'll take it all the way back. You're not posting on Forex.Today, then you don't really have a plan. So then every day when you sit down at your charts, you start looking for a trade. I wonder what I can trade now. And that is just guaranteed failure. Absolute guaranteed failure. So you need to change those habits. You need to wake up in the morning and say, wonder if I can buy the dollar yet today. Wonder if I can buy the yen today. I wonder if I'll have the opportunity to do this or that. Wonder if I can sell the Kiwi. Wonder if I can buy the Kiwi. But the thing is, you have it set and you've made decisions, and then you start analyzing the market to determine whether market conditions are favorable to your analysis, to your bias. And the longer you sit down to play Forex as a video game, like, oh, boo, 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 today I'm going to buy it, tomorrow I'm going to sell it, and I'll wing it. I'll just go by the seat of my pants. My gut's going to tell me. Yeah, boo, 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 boo. It's holding you back to the point where we've talked about these moves days, weeks, and months in advance. So you have a crystal ball.
Between Saudi Arabia, Russia, and other
you have a pretty good idea what's going to happen in the future.
Monitor the market. Comments
right
with the Russian minister.
So I took care of that for you. Let's say, I'm teaching you how to do that. So then what? Then if that's not the problem, then we've uncovered something, and that is a huge gift to have. You understand? It's a huge, because we're finding the truth. We can take care of technical analysis. It's not a problem. Fundamentals maybe takes a little more time, but it's not unheard of. It's not an unsurpassable. It's not a mountain that you cannot climb. It's some time and some effort. That's easy. So the more complicated stuff is what's holding you back, and it's your behavior. You're going to have to change your behavior. And you may be unwilling to, or if you knew that may be the thing holding you back, then maybe you'd change your behavior. Right? Somebody, do you remember several months ago somebody said, well, they're having a discipline problem. Like, great, I got a solution for that. Right? Get up at 4 o'clock in the morning. Why? Because it's difficult. That's it. Whatever it is, you pick something like that, like pick something you just don't want to do. I don't want to wake up at 4 o'clock in the morning every day. It's very inconvenient. Yeah. Yeah, you got it. That's it. But wake up at 4 o'clock in the morning, and if it's not a good time to trade or do your analysis or post your trade plans, read, do push-ups. But do it for a long time. Right? Prayer meetings, that's fine. As long as you get up. But, you know, it can't be sort of a convenient thing, though, too. You got to be careful, Fred, right? You can't double dip so much. It's just got to be difficult. Find something difficult, find something that you've been avoiding, and do it over and 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 over. Right? Like trade non-farm payrolls for 142 months in a row. Do daily webinars every single day, whether you're on holidays or sick, or if it's storming, or if you have the day off, or if you're in the middle of grad school, or if you're flying on an airplane, or if you're... Why do you think I do these things? It helps me be a better trader. You know, I suppose the difference between work ethic and discipline is probably quality, would be my guess, Fred. The difference between a worker and a craftsman. Okay, you got to make your decisions now. This is the 5-minute pullback, 5-minute retracement. Are you going to take a shot, yes or no? Or do you think it's a full-on counter trend? You're going to have to make that decision. You're at a 382 pivot, okay? The next one is really a 618 up in here. This is it, man. This is decision time. Right? You tell me, what should I do? Huh? What should I do? Should I do it? Should I do it? Should I? Cool. Okay, I'm taking a screenshot. I can post that at Forex.Today. See? Very difficult. All right. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. I hope it was helpful to go over non-farm payrolls, the labor participation rate, and hourly earnings, and pulling that down onto real terms, and then watching the news come out together. Thank you for posting. I hope it's helpful to go through your charts. I hope it was helpful to go through my charts. And thank you for interacting with the real-time guys on the activity feed. I hope to see you over at the activity feed. Remember to give the boys feedback, because as far as they're concerned, maybe they're just talking to open air. Who knows? They'd love to see the community involved. And thank you for being a client of TradersWay. We appreciate you. I'll see you tomorrow.